Hello my friends, welcome to the Dime Investor channel. Today with a new video regarding inflation, what my thinking and thoughts about the inflation and what I can do, what I'm thinking to do, and maybe you like or maybe you agree with me what I'm doing. I'm just sharing my thoughts and opinion. I'm not a financial advisor. I'm just sharing my opinion with you guys. Maybe it can be helpful for you. Let's dive in. What's my thinking and thoughts and why I am thinking this one. Okay. So going to the charts straight away. Try to explain the charts in my normal terms. I hope you guys can understand and try to make it simple as much as possible. So let's go dive in. So at the moment, if I go to the chart structure, let me see. First thing is I'm gonna pop up, bring it here for you guys. Consumer report of USA, and this chart is from US Bureau of Labor Statistics. And in this chart, actually, we can find out what's going on in the US market, because there's a huge relationship between the US market, economy, dollar, with everything around us, because the most reserved currency in the whole world is the dollar. So if you want to understand the inflation, you need to understand the dollar, what's going on in the USA. So that's the price index. I bring it up from Consumer Price Index USA, just released a report recently, which is I can see the updated here is 13th of July 2021. So in here I can see the 12 months percentage change in Consumer Price Index. If you check all the item, it's changed 5.4% in the last 12 months. What about the food cost? The change was 2.4, and energy price change 24%. It's massive. Now all goods and food energy altogether 4.5. If you check on the other side, you can see the CPI of all item rises 0.9% in June only, as many indexes increase. In June, the consumer price index for all urban consumer rose 0.9%. I don't want to read all those things one by one. I just try to point out this very important things for you guys. So in here you can see rises 5.4% over the 12 months. So at the moment, all the price gone up 5.4%. Let's see what the other chart says. In here you can see the difference in change consumer price index around consumer and consumer price index for all urban consumers, US cities average all index in June 2021. So in this one you can see the difference between them. May, April, March, what was the price and what's the change? If you check up, okay, and just unadjusted 1 month percentage change and unadjusted 12-month percentage change. Okay, in 1 month change is, you can see the difference is not look like it's showing that much, but when you see the yearly 12-month price change from 2020 to 2021, the price change is actually quite high. And only these changes also change in between last few years, not too far. You see, it was 1.3 before in September 2020, and now at the moment in June 5.3, and it's changing every single month. It's increasing and increasing. So if I go more, the current inflation about the UK, what's going on in UK then? At the moment, the government data says UK is facing 2.5% inflation rate, but the government statistics, if I go to the UK government websites, what I can find here, like 2.4% is showing for only the June. If I go deep dive Okay, you can see the full chart for this last few years. What's going on? We saw this kind of high inflation in the recession time, 2008. It was 4.4. Then afterward, government pumped lots of money. So economy is trying to increase. So the inflation go down. When everything open up, everything go back again. So inflations keep going up and up and up. And it gone to like 4.5, something like this in 2011, 12-ish. Then it go down, try to stable the things, economy. And afterward, what happened in here, 2018, 19, you can see same again. Inflation gone up. Government put lots of money, benefits and stimulation checks in USA. So inflation go down because everything was closed and people are not spending. So as soon as everything opening up, people start spending those money, inflation gonna go up. And at the moment it's 2.4. Okay, now this is a small chart I'm saying because I don't want to go in depth. It's gonna be really boring. I just want to compare some of the small things. Maybe it can help you out. So if I check actually why I'm explaining these things, so I'm trying to save my money from this inflation. So I can find out that gold is always being told like it's a hedge against inflation. What I can do, what I can see from the data. So I go, I love to invest in the stocks and shares. So I prefer to have a look how is it going with the gold, silver, with the stock market like S&P 500 or Dow Jones. So if I check Dow Jones versus gold and silver, you can see here, this actually chart shows here, not too far, last 50 years actually. So in this last 50 years, if you compare, actually the gold price did really well, silver not did really well, S&P and Dow Jones is quite like very close. But the funny thing is, when you check the chart, change the timeline, 50 years, last 30 years, last 10 years, the complete scenario is changing. So, okay, let's see how is it going on gold versus S&P 500 in 100 years. So I moved to 50 years, last 50 years to 100 years. So when we go to last 100 years, I can see S&P 500 and Dow Jones did quite significantly well rather than silver and gold. Okay, that's interesting. So if I go back, I'm looking 50 years, the chart is saying something a bit different. Okay, interesting. Let's go. What's going on in here now? Recently. At the moment, if I check the recent years, how is it going? So you can see at the moment, gold and silver and Dow Jones and S&P 500, the return is in here. Graph is saying this one. Gold is higher than silver, than Dow Jones, than S&P 500. So if I want to get a good return in this year, that's the situation at the moment, from the last few years. And if I deep dive, so I want to know about the gold and silver because I want to invest. So in this situation, I explained to you before, 100 years is showing something, 50 years showing something, and if I check the recent years, how is it going, it's different. And if I try to find out how is it going between dollar and gold, so you can see here is a different situation here. So dollar is blue one, gold is the red one, and at the moment actually gold is higher than the dollar value. So gold is holding more higher value at the moment, though the charts actually showing till 2000 April something, and the recent one I think July, not bad, not too far. So dollar valuation is going down, gold valuation is going up. So if I want to think in the long run, gold did very well than the stocks and shares. If I go more than 50 years, actually the stocks did really well. And one more thing actually I want to share with you here. If you check this chart, you can see show the recession. So this is the recession period actually. 1 second, let me make the things a bit better. So in this graph you can see it's 2008, there's a recession time, and here we are expecting a recession here as well actually at the moment, 2020 2021-ish, because the gold price gone up than the dollar. Here you can see the difference was here as well, and afterward the price gone up huge. The difference between gold and dollar was huge. So we are kind of facing this kind of situation. What happened here in this area, it can happening similar kind of things here. So you can see the market changes. So in my scenario, my opinion, I love stocks. I love gold too. I want to save my money from the inflation and I want to get a good return. So my thinking and thoughts is stocks really does well in the long run. Also the gold. So which is the best? I can't explain or I can't like judge this way with the small facts. It depends upon the too many things and factors. Inflation, all the government trying to make it in the range like 2.5 each by the books, and they try to adjust it every single year. So we may be not seeing a huge inflation rate in very quickly, but if in the long run we can see a big difference between the dollar and the gold price, so we're gonna see a big price drop or price increase in gold. So rather than if I'm holding a gold physically to save my money, it's not generating any income. Moreover, I can't keep the gold in the home, it's not safe. If I want to buy the physical gold, I want to save it, preserve it, so I need to go to the bank or somewhere where I can put in a locker or something, and I need to pay fees as well to keep it there. So my point of view is not feasible, because look, two things I know in the investment: asset and liability. That's asset, that's liability. If I buy an asset, generate income, that will be the asset. And if I buy something which is not generating income and cutting my pocket and take out the money, and that's actually liability. So that's my asset which is generating income. That's not generating income, so that's the liability. So I need the rock to break the scissor. In here, in a very simple concept, so I don't want to save my money buying gold and after I need to pay for saving that one. It's no point. So rather than doing this one, who will be benefited if the gold price gone up? Gold mine stocks. The miners who mining the gold, they will be beneficial. So rather than holding physical gold, I buy some mine stocks, gold mines stocks. So the price appreciation gonna be better when the gold price gone up, the stock price gonna go higher. Plus, if I choose some very good valued gold mines and I get return with the price appreciation, is very good, it's win. And on top, if I find some good stock which one I can get some dividend as well, that will be cherry on top. So I'll get a passive income, my assets generating income for me while I'm holding it to save my money from inflation, plus I'm generating more money from this one. I think that would be the best options to do. So I will finish it here today. Next video, I'm going to bring up what I think about the gold mine stocks, which stocks I'm looking, why I investing on those stocks, and which one is best and which one maybe in my opinion I feel like good value, Stay tuned. I'll get back to you with new videos about the gold mine stocks. Is the end of the video today. I wrap it up here. If you like my video, if I can clear something is like like a layman term, like an average Joe, it's completely for entertainment purpose because I'm not a financial advisor. Is everything what I'm sharing is my opinion. I have no financial degrees, so it's completely entertainment purpose. And if you like the video, please and do subscribe and smash the like button. I'll really appreciate that one. Thank you very much. Bye for today. See you on the next video. Thank you.